y'all so much. Look, you know how we do it around here. We save the best for last. There is one final panel for the rest of the day today until you have to see my beautiful face again tomorrow. I'm going to need that energy for this last panel. It's a long one. It's a great one. I'm so excited to introduce it. Investing in Web3. It's also the only investing panel. So if you want some alpha, if you're trying to make that sweet, sweet moolah, I think this is the panel for you. So look, without further ado, I'm going to introduce your moderator, Alexia, joined by an incredibly stacked speaker panel. Welcome to the stage, Karen, Vanessa, and Jessica. Clap it up one more time for your last panel today. Thank you all so much.
I'm living in that 21st century, doing something mean to it. Do it better than anybody you ever seen. Do it. Screams from the haters, got a nice ring to it. I guess every superhero need his theme music. No one man should have all that power. The clock's ticking, I just count the hours.
Okay, hello everyone. Thanks for making it to the last panel of the day. That feels good for us. By way of introduction, my name's Alexia. Contrary to what it says on the screen, I actually was previously an investment associate at Multicoin Capital, I think a fairly well-known crypto venture capital firm. We are a thesis-driven investment firm, but I became so enraptured with one of my theses that I ended up leaving to start my own company, which is Tata Bazaar, a social commerce layer for digital fashion and beauty goods. But I'm really excited to be here with three current investors in the consumer space that I've had the privilege of working with over the past couple of years. So I will let them introduce themselves, starting with Karen.
Hi, everyone. I'm Karen. I'm an investor at Collab and Currency. We're an early-stage consumer crypto fund based out of the US. We've been investing in the space since 2018, founded by our managing partners, Derek Schloss and Stephen McKeon. And yeah, I'm excited to be here.
Hi everyone, my name is Yasha. I'm a partner at Greenfield. We are a crypto venture firm based here out of Europe. We've also been around for a couple of years and started investing in 2018, mainly on the infrastructure side, a lot of DeFi over the years, but then lately, over the last 2 years, we started dipping our toes on the consumer side, and I'm quite excited about everything that's being built there.
Hi everyone, my name is Vanessa Gurley. I'm the managing partner at Aglaé Ventures. We're an early stage fund based in the US, and we also invest in Europe.
Okay, so I think we'll start off very broad and then we'll kind of narrow in as we move through the discussion. We'll start with the market, not necessarily whether we think interest rates are going to go up or down, because I don't think any of us are experts in that, but let's talk about it from the investing perspective. How are we feeling about valuations, about price sensitivity? What do we see happening in the market from our side rather than from the founders? Rate of deployment, et cetera, et cetera. I would love to, we can start with Karen this time and move down, and then we'll kind of switch up the order.
Yeah, I think, this is kind of an exciting time in the market. Obviously, the past 1 to 2 years have been a little bit quieter as the industry recovered from some more turbulent conditions, but I would say there's like a lot of different stars aligning that make this a really interesting time to be part of the industry. Obviously, the BTC ETF was a significant milestone, so that brings in sustained interest into crypto. We've seen continued institutional buy-ins from consumer corporates like Visa, Shopify, big brands like LV continuing to experiment, and gaining some regulatory clarity in places like the EU as well. So I think there's a lot of reasons to be excited, and I think the market is kind of reflecting that in the past 3 to 4 months. Counterintuitively, I would say it's kind of during the quieter periods, like last year, where a lot of the hard work is done as at an investment fund. You're working on your core thesis, you're planting your flags during that period. So it's actually when things start to get a bit frothy where you want to proceed with a little bit more caution, make sure you're performing the same amount of due diligence and research and maintaining the high bar.
Yeah, I guess on our side, I would totally agree. Bitcoin is trading in 50,000 territory again, so you could say it's clearly bull market territory. For us, if it is, for us, this would be the third bull market. And I think over the years, you start to develop this kind of love and hate relationship with these cycles because, during a bull market, obviously, prices are going up, portfolios are looking good, investors are happy, everybody's in a good mood, mainstream media is writing well and nice about crypto. But then on the other side, things are much more stressful. There's so much more competition on the deals. A lot of the funds that left in the previous bear cycle are coming back to deploy, so you have these kind of tourist in and outflows that we see. So things are a lot more stressful. But on the flip side, on the bear market, it's obviously more painful. Prices are down, portfolios are not looking so well, investors tend to be a bit more nervous. But then you have so much more time and it's so much quieter and you can really, spend a couple of weeks building a relationship with founders. There's not so much things happening in a rush. So I think for us, we always look at it with mixed feelings between these cycles. I guess in general, what you probably also start to see between these transitions is that there is a lag. Public prices start to move early, whether up or down, and then people's mindset shifts with a little bit of a lag. So I think probably in 6 months from now, we will be sitting here and looking back and saying, okay, the ETF approval probably marked the beginning of a bull market, but it only takes a few weeks or months for you to actually settle in and realize and kind of get yourself into that mental mode of a bull market again.
So I would say we're all, long-term investors. We're VCs. We're obviously not traders when we invest very early in these companies. And we see a decoupling from the price of the public market led by the ETF on Bitcoin and the Bitcoin halving and the future ETF on ETH that are coming up, and the early stage investing. So we're not out of the bear market yet, I would say, in terms of investing, but we see a disconnect with the price action. And the way I look at it is there are two types of investments that we do. The ones that are in equity only, that follow sort of traditional business model and Web 2 models, and investment in tokens. And on the Web 2 side, or Web 2 equivalent, I would say it's kind of harder because of the direct impact of interest rates. And if we think it's higher for longer, we see that our traditional VCs are suffering in that respect. The other issue with these investments is that the TAM and the numbers are really small compared to Web 2. So, you really need to right-size the valuation and your commitment to those companies. On the token side, we see less hesitations, I would say, on those types of investments because the returns are decorrelated from interest rates, and the monetization or the liquidity is much faster than a traditional Web 2 model where the company either needs to be acquired or do an IPO, and that takes a longer time.
I feel like one of the things that contributes to interesting times and a little bit of volatility in terms of cycles in the market for us as consumer investors is being in the consumer space in crypto, which is typically in the bear market, like when we're considered the ugly ducklings and no one wants to talk about consumer, and it kind of like lays a little bit low, and then it comes to a bull market and everyone's like full force back into that side of the stack. And so I would like to, I mean, consumers kind of had a moment in the past few months. We had Friendtech, we had Crypto the Game, Farcaster, which is like the first 4-year overnight success in the space. But I'd love to know from your perspectives what you think the learnings are about consumer over the past year or so that you've seen. And then more specifically, what you think worked in the last cycle that you don't think will work in the next cycle. Vanessa, I feel like, do you want to start with over there?
So regarding the projects that you mentioned, I note that these are projects with tokens. So those address a very specific market of crypto natives, and their behavior can be incentivized by tokens. and you create a market like that. So I think it's really interesting. I think the developments with points is also interesting. So points are additional ways to incentivize specific behaviors. And I think the issue is like, how do we get those mechanisms to the larger consumer, and is it possible? Is that something that's going to succeed? I haven't seen it succeed yet, but I think that that's probably the next wave of consumer engagement, where maybe you're able to create these types of mechanisms without calling crypto, without calling it speculation, so that the general consumer is not kind of like put off by it.
Yeah, we're not there yet. But Yasha, let's move on to you.
I mean, I think for us, the last year has definitely brought some light at the end of the tunnel. I mean, we're not just focused on consumer alone. We've done a lot on the infrastructure side, a lot on DeFi, but I think from the consumer lens, what last year has shown is that crypto is not just about infrastructure and DeFi anymore. There's definitely a lot of experimentation happening around consumer-centric application. I think if you look back to kind of the collapse of the NFT market, if you will, in terms of volume, what has remained and last, and I think that's something that we're extremely excited about, is that experimentation level from creators and developers on that consumer layer. So social clearly has had its moment. But then on the other side, we do try to work a lot with data and on-chain data. And I think what is still clear is that consumers are not there yet, at least not to the extent where we can compare it with Web2 scale, obviously. Even Farcaster, as one of the kind of more recent success stories, we're talking about a mid-5-digit numbers of monthly active users, which is nothing compared to what we see in Web2. So I think that's a little bit always the balance that we try to have when I guess trying to control the excitement that we have in general for some of the things that are being built on the consumer side.
Actually, following on from Yasha's first point, I think 2023 was actually kind of a big year for consumer. And the reason why I think it is, and it was kind of overlooked just because of like external market sentiment, is because we've made a lot of improvements on the infrastructure layer for application developers to actually be able to create and focus on creating net new consumer experiences. And that is why I think, Farcaster and Friendtech was actually, we were able to see them as a breakout, is because of some of these infrastructure updates that we've made as an entire industry. But some of those that I'm talking about are like UI UX improvements with projects like Capsule and Privy, who have made the process of logging in and making an account and signing up to crypto applications so much more simpler and more familiar, using things like email and social accounts and being able to actually recover your account when you're locked out. These are important things because we have this
Basics.
in Web2. So we're there, And then obviously we've also made improvements in account abstraction. It's so much simpler to on and off ramp out of crypto now with Kato, MoonPay, and a bunch of other projects. So I'm actually mostly excited to see, and I suspect there'll be a lot more consumer applications being built now that we have or are inching closer and closer towards having the right tools for projects, for developers to actually be, creating consumer applications on.
Okay, but what your comments make me think about is something that's very controversial, I feel like, in the crypto space at large, specifically, Vanessa, kind of what you kicked off, which is, what do you think about, specifically for consumer, building particularly for crypto native audiences versus building for the masses? Which one do you think is better or preferable, and why? I always joke, which gets me into so much trouble in crypto, which is if you're building for crypto native, it's probably because you don't have a UX that appeals to the masses and you just couldn't. So I would love to hear, I said it gets me in trouble. I would love to hear your thoughts. Let's start with Yasha this time, and then we can kind of move around.
Yeah, I think that's a very good question. If you look at Friendtech and Farcaster, for instance, these were or are all great examples because that just shows and is a demonstration of what is possible on the Web3 or crypto stack today from the consumer perspective with all the improvements that we've seen in this previous cycle. But on the other side, I think, and that's a bit the bridge that we try to build mentally into Web2 when looking at consumer products. I think we have yet to see something sustainable, because even Friendtech, it came, it surprised everyone, but it also kind of disappeared again. So, and I do think that, and it's probably also a natural pattern, that if you look at previous, new technology platforms or development platforms, we've always had the tendency to, in the first generation of applications, to kind of rebuild or mimic what we did on the previous platform. And then only later generation of applications, so mobile is the perfect example, only the second or third generation of applications brought us Uber, brought us Instagram, brought us Snapchat. And I do think it's similar here as well, that we have to look at what are the unique proprietary killer features of this new platform. With mobile, it was the fact that these devices had a touchscreen, or that they were portable, and they had sensors and could move around in your hand. So, and then these applications were built around these features. And I think that's a bit the way we look at Web3 consumer as well. It's funny because when I started using Farcast or Webcast, it feels a bit, and I'm an old guy, so I was on Twitter 2007 or 2008. And it feels a bit like Twitter at that time. So I'm not super active on Twitter, but if you scroll back on my Twitter, back to 2008, I would post stuff like, hey, I'm just listening to this song, or I just bought a coffee at Starbucks. So really weird nonsense. And today we post these super intellectual, long threads of like whatever. And I think, and on Webcast it's similar, because I go there and I see Vitalik posting, oh, I listened to this song while going for a run this morning. So it feels like some things, nothing is ever always the same, but some things then kind of keep repeating in certain patterns.
Are you saying you don't like Twitter threads? I'm shocked. What? Are you even a crypto investor? Vanessa, let's move to you.
So I kind of tend to agree. Our thesis is that infrastructure is actually not ready for people to build large-scale consumer dApps. A little bit like in 1998, it wasn't ready. 2001, large companies, were able to build on the internet. And I think we're in the same situation. Plus, we have security issues. We're dealing with transfer of value. And, there's not enough developers with the UX experience maybe that have come in. So I would give it a couple of years to have mainstream consumer apps that will take off in a way that, and with the numbers that Web2 applications take off with.
I totally agree with Yasha in that we haven't found anything sustainable. We're seeing bursts in things like Farcaster, Friendtech, but we haven't actually seen those numbers sustain and actually go linearly upwards. But I think there are learnings in every one of those breakouts. So for Friendtech, for example, it was directionally successful in kind of showing us what is possible at the intersection of social assets and token gating and speculation. And although its mechanisms are definitely flawed, I would say something that was really interesting to me and I think is very unique to crypto, which I encourage builders to lean into, is the fact that the user base was completely negligible. I think today it's like 800,000 total unique users. Most Web2 social applications within the first year, I think BeReal had 80 million monthly active users. There's a big difference there. But Friendtech, in its first couple of months, was able to make $20 to $30 million in fee revenues. You don't see that in Web2 social applications, and I think there is definitely power in leaning into that. But to answer your question,
She got there.
sidetrack. I think there's room for both crypto native and crypto enabled. I think there's certain projects and applications and platforms that are better suited to a crypto native audience, and there's some that are better suited to the public. Like, for example, payments in Latin America. That is obviously way better suited towards the mass public. Meme coins, maybe soon, but I still think that's pretty crypto native culture-wise. So yeah, I think there's room for both.
Dog with hat feels like it has a lot of mass appeal. I don't know what you mean. But okay, I think every time there's an investor panel, it's always like, well, it hasn't been sustainable. These products have flash in the pan moments, but they don't have longevity, which always then begs the question, what are you excited about? What do you think has longevity? What space really grabs you right now? And then what is your thesis around that space? And perhaps even what are some examples of companies you think are really doing well there? I would love to hear what you're focusing on at your various firms. Karen, let's start with you.
So I can say personally, okay, so the categories that really excite me, because there's a lot of them, and I think the thread that kind of connects all of them is their ability to meet people where they are at. For me personally, I think gaming is probably going to be the first category to bring on a substantial number of non-crypto natives. Something like $19 billion has been injected into the gaming Web3 gaming industry specifically over the past 5 to 7 years, and some of these games are coming out this year or next year, so it's going to be exciting. But when I'm looking at gaming projects, there are two qualities that I'm most excited about: games that are, incorporating crypto primitives into their core gameplay. A good example of this is a game called Pixels. And then another type of quality that I look for are games that are really experimenting at the fringes of emerging technology and combining them and aspiring to create completely new consumer gaming experiences. I think Parallel Colony and Today the Game are good examples of this. They're both built on blockchain rails, which is already kind of a new technology, but they're also heavily experimenting with AI NPCs. So I'm really excited about those two. And then digi-physical goods.
Woo!
I love a digi-physical good.
Same.
I think it's going to be a dark horse in a lot of ways, because it's so good at abstracting away the complexities of crypto. And there's some really strong projects out there kind of paving the way here, like 90cc, obviously, over there, front and center, Tribute Brand, IYK, Snowfroze Generative Goods, and Trame, I think, is also here today. So, yeah.
Are you saying digiphysical because you don't want to say the word phygital? I guess.
Yes, I choose to say digi-physical.
They're all bad. They're all just
I know.
bad.
Someone come up with a better name.
Connected.
Oh. Okay.
Yasha, let's go to you.
For us, there are a couple of things on the consumer side that we're excited about. Social is definitely one. Maybe to get that clear, just because something is not sustainable today doesn't mean that we're not excited about in the long term. With regard to some of the areas that we've looked at deeper, definitely digital fashion. That was actually for us the starting point in 2021 into, I guess, more consumer-centric environments coming from infra and DeFi. And the reason was, and I guess the thesis was pretty simple, we just looked at facts in terms of the existing user behavior. We all know Roblox, and we all know the numbers that Roblox publishes on a yearly basis about the user behavior with fashion. So these were extremely ensuring elements for us in terms of building conviction around user behavior. Now, the question then obviously was, is there, and if so, what is the timeline for this to translate into crypto? That, I guess, is the big known unknown. But in terms of the user behavior, we felt like, okay, well, this is a good area for us to start building experience and knowledge on the consumer side, because if things don't go as we think, or we underestimate their timeline, at least these companies can still build a meaningful business in Web 2 and grow within those audience, and then kind of work with them towards more Web3 native environments. So on that side, we invested in a company called DressX, which people in the audience might know, the Fabricant. So we did quite a bit of work on that side. Another area that we currently we haven't done anything yet that we did or are spending quite a bit of time on is that whole notion around prediction markets and on-chain betting, which might not be, I guess, as consumerish in the context of this panel, but we do think about blockchains as platforms and mechanisms to coordinate people, and I think the coordination of knowledge and the financialization of that knowledge could be an interesting area for us to build consumer products around.
So I'm thinking e-commerce and anything related to platforms around social media is what I like, and trying to find ways for the consumer to make money, like the Web2 platforms have empowered the consumer to make money and the creators to make money. And that was a little bit like what the NFT marketplaces were. And I'm surprised that they haven't grown to do something else. They stayed in that specific lane when they had a captive audience. And so I'm interested to see the next generation of that, and anything also related to the metaverse. I still like AR in the metaverse, and it ties into the gaming, of course, but I think really that direct hit on the consumer and ability to make money will go a long way.
Yeah, I think e-commerce and Web3 are a no-brainer. Once you tokenize all assets on the internet, it just unlocks a whole new version of e-commerce where you can have automatic revenue sharing, better attribution, whatever, and it creates a new P2P economy, peer-to-peer economy that we weren't really able to tap into in Web 2. So I totally agree. But that actually brings me to the next idea, which I think, Vanessa, I kind of know what your opinion on this is going to be, so maybe we start with you. But there's a lot of contention in the consumer space specifically about whether consumer products should have public tokens. There's questions about whether it incentivizes bad behavior and short-term gains, or whether that's actually how consumers in the future will make money. So I'd love to start with Vanessa and then hear your thoughts.
I think tokens should be more akin to loyalty points, so that you take away that speculation. The issue is, what is the value of that loyalty point? Is it a fixed value, or is it something that moves around, like with token economics? And I think each attempt to use those token economics with, social, et cetera, has failed. So I'm not sure we're ready for that, as we discussed before. And there might be new ways to design those token economics in a different way for consumer behavior.
Yasha?
I think, it probably depends on the layer in which you are looking within the consumer stack. If you look at something like Farcaster and compare that to, let's say, DeFi protocols that do have a token, I think a lot of the reasons why DeFi protocols should have a token could apply to something like Farcaster. Apart from the aspect that this is an instrument for people to speculate on, I think in the long term, it obviously aligns, incentives and allows for participation in the value that is being created. If you look at the governance aspect, it obviously allows you to not just participate in the value, but also participate in the decision making, which could be as kind of an underlying protocol that hopefully powers a lot of applications, a very powerful proposition. And then lastly, it's obviously also is a great instrument for you to incentivize adoption and early usage. The question then becomes, do individual applications on top of that have to have a token? And that I think is probably also dependent on the individual application. But I would agree, points are a very, very good instrument because not everything across the whole stack has to be fully decentralized and governed through a community. And some things can actually work and function in a centralized way quite nicely, and there doesn't have to be a token on every layer.
Yeah, I always love what Dan Romero says about sufficient decentralization being optimal. But Karen?
I think it's kind of a nuanced answer, I would say. I would go about thinking about it, I would go about breaking the consumer category into two groups. I would say there's the crypto native side and then the crypto enabled side. The crypto native side are projects like meme coins, on-chain gaming, NFT financialization, whereas crypto enabled might be more like loyalty, payments, and I would potentially group social into that right now as well. The former is much more suited to a token economy. The latter isn't. My overarching statement would be, we as an industry should really lean into the qualities that make us unique. And one of those qualities is the ability to speculate. We've seen NFT collection prices being driven up by its community. We've seen cultured products like meme coin surface, entertainment platforms like Unlonely really leaning into the idea of speculative online dating. Speculation is just a unique feature to crypto, and I think builders should really lean into that. Crypto is also really good at incentivizing networks, so and reducing the need for a middleman. So that's why deep-in projects like Hive and Helium are really suited to a token economy. Games, for the longest time, have had off-chain economies, so it makes total sense for that to be replaced by an on-chain economy. So, but it's not a one-size-fits-all model. I don't think we've actually, we've kind of been discussing, I don't think we found a sustainable way to incorporate tokens into pure social plays yet. Friend Tech really showed us what can be, but ultimately it was flawed. So more experimentation just needs to happen.
Yeah, I think another helpful delineation is kind of between public ecosystem tokens and then private ecosystem tokens. And I think that as much as crypto enables speculation, it also enables ownership. And so when you talk about a private ecosystem token, a lot of times people are like, well, what's the point? But the point is ownership, the ability to own the perks and benefits and loyalty points, like you pointed out, Vanessa, that you've gained by participating in an ecosystem, which I also think is something really valuable that founders can look into. But for the last question for today, we keep saying we're so early, and we are so early, and the majority, I think, of all of you are primarily early stage consumer crypto investors, which I don't actually think you can be anything different right now. But I would love to know that given it's so early, when you are looking at companies and evaluating investment opportunities, what are you looking for to indicate future success? Let's start with Vanessa. Move this way.
So 2 things. We look very early at ideas and founders. And their ability, or what we understand is their ability to execute. Because we don't have much more information, right? So is the product a good market fit? Is there demand? Is it solving a problem? Is the founder understanding really well the ecosystem and the problem he's solving, or is he solving a problem that doesn't exist? And then we have it's the founder, but it's really the team. So we prefer 2 founders and a mix of sort of different skill sets. If we have a technical founder and a business founder, especially on the consumer side, and people who are subject matter experts, we really like that. So we did a few investments really with no product, no revenue, and they turned out pretty well, so pretty happy with that.
Yasha?
Yeah, I would say pretty similar. I mean, we are venture investors and not traders, so we invest out of an existing relationship with a team, which that's the core. In terms of data, given, I guess, the early stage of that consumer layer and the lack of data, we actually look into Web 2. So, Roblox taught us a lot. on this journey into digital fashion. Even though, again, not everything is, you cannot take everything for 100% and apply that to crypto, but still it teaches you a lot about the consumer behavior. And then in terms of the more crypto native data, even though the user numbers are small, we try to work with on-chain data as much as we can. So what when we did look into music last year, we looked into every wallet that was holding music NFTs. We tried to understand their user behavior, whether these are flippers or people that are actually utilizing the assets and potentially holding them longer because they're collecting. Bottom line was everybody's flipping. So there's no long-term, not yet, right? No long-term flipping. Same with fashion. We also try to understand, are these people holding them for longer or also flipping? Turns out most of them are flipping. So, but I guess it's, for us, we are also learning with the ecosystem. So I think it's important to, even though the databases are sometimes not representative and small, you need to start somewhere and then just adjust and go with the market.
Karen.
I think Vanessa kind of pointed out how abstract the process is of assessing any early stage projects, pre-product, pre-revenue. There is no data that you can rely on. But at Collab, we live by the Holy Trinity. We're looking for the right founders, solving the right problem at the right time. And yeah, we need all three.
Easy. Easy. Well, now, if there are any founders in the audience, I'm assuming there are a lot, you know who to talk to and what more or less they're looking for. So thank you guys so much for your time.
Thank you.
Thank you.
Thank you, Alexia.
And enjoy NFT Paris.
This was the hardcore consumer audience. Still left.